Hooty hoo, all my stock market gamblers. Welcome today. It's Friday, made it to the end of the week, and what a week it was. Now we're going to have a down week again, but we having a nice bounce in the market today. Well, the bounce is already pulling back though, but the Dow was up about 500. The NASDAQ was up about 500, but now they pulled back. Dow's down to only up a couple hundred, and NASDAQ still up about 300. But what this means is we've had this big down week, but now we've rebounded. So that's going to have this, if you look at a weekly chart, it'll have like a little tail that went down like this and then back up. This is where the bottom is starting to form. The bottom, maybe the bottom's in. Now the Russell 2000, the IWM, if you look at a weekly chart, its tail went right down to the 200-day moving average and then bounced off it, the 200-period moving average. That's on a weekly chart. Now this is usually what constitutes a bottom. Now I think the short-term bottom is being formed here. Maybe even the bottom is in. We'll see if next week can hold these lows, and then we're going to get that rebound. We're going to get that, actually probably a strong rally would be my guess. And that rally is going to push us back up towards the all-time highs, and we'll see. See, we formed this short-term bottom down here, but we're also looking to form that long-term top. Now, have we already seen the top? It is possible, but I think they're going to make another run back up. And then we talked about that in my last video. We talked about that. They're going to do it with, well, basically stock buybacks. A lot of companies are going to be buying back their stocks, once again with cheap money that they get from the Federal Reserve. So I'm very happy today with the action in the market. I do think we've found the short-term bottom. I do think we're going to get a rally off of this level, and I do think we're going to head higher next week and the following week. Now, we've had 6 straight weeks of down. This will be the 6th down week, and if the market closes where it's at today, yes, we'll have another down week. That's 6 in a row. Very unusual to have that many, but that's usually the sign that we're forming a bottom and that we will get some type of bounce, some type of rally. All right, so let's move on to the real estate market. Now, I have a couple of clients that, well, basically they canceled their escrows. They were in escrow, but one of them could not get a loan. Now, he was buying a townhome, and the lenders did not like the association. They did not like that the association did not have enough reserves for all the repairs in the complex. So they backed out. The lender backed out. My buyer, he still wants the property, but he's gone to 2 different major banks and he cannot get a loan. People are not loaning on these properties right now. This gives the banks a way out. Now, the banks wanted to cancel his contract, so they said, no, we're not going to make the loan, and therefore my client does not get that property. Now, I had another client. Now, he was interesting. He said he's got to hold off for buying right now. I go, well, why are you holding off? He goes, well, my down payment kind of got smushed. A down payment got smushed. See, I don't hear that all the time. That's kind of new. I go, really? What happened to your down payment? Oh, well, I was in some of these cryptos, and the crypto market kind of went down, and that was kind of where my down payment money was. So he kind of dropped out. So a lot of people are starting to drop out. The demand is falling off. In my area, I'd say the demand has been cut in about half. But the real estate market, it is in transition. It is changing. Now, I think the real damage was done when rates went from 3% back in December to almost 5.5%, well, over 5.5% now. 5.5%. That's almost a double. I mean, that is painful in the housing market. When you look at these new home builders, they have, well, they got 1.5 million properties coming onto the market. Now, when they've penciled these out, they were penciling them out to sell them at a 3% interest rate. They don't pencil out at 6%. They really don't. They don't have the buyers to fill these homes up with. What are they going to do? Well, builders got to build, and they cannot sit on this inventory. They have to dump it. So they kind of dump it at a fire sale price. It's just part of what's going on. Now, where a lot of the inventory, now I'll agree that inventory is down. Now, it is starting to come back up. they're starting to see inventory coming onto the marketplace. And that's going to change fairly rapidly, I think. And a lot of that inventory, actually, as weird as it is going to come from foreclosures. People don't get that. Look there's over 1 million homes that are over 90 days delinquent on their mortgage. I mean, these are the ones that are starting the foreclosure process. They're starting to foreclose on these. Now, a lot of these have equity in the home, so they'll be able to get it sold, but they'll be dumping it onto the marketplace, and that's where the inventory comes from. Now, this forbearance, there's like 5 million of them. 5 million people have not been paying their mortgage. I know that sounds crazy, but they haven't been paying for the last 12 to 18 months. They were in forbearance. Now, forbearance doesn't make those payments go away. At some point, they have to catch up, and a lot of them are not going to be able to catch up. So what does that give them alternatives? Well, it gives them the alternative of either giving the property back to the bank, and banks are getting ready for this. They're starting to onboard us agents. We're starting to get onboarded. They go, hey, we got a lot of properties coming. We want to hand them off to you. Get onboarded with us and start getting through the process. Get through the process with Chase, Wells Fargo, B of A. The onboarding process for short sales has started. But a lot of these properties will go back to the bank. Now, some of them, they'll have equity and they'll end up selling it. But you got 5 million homes coming out of forbearance. And a lot of these people, they can't catch up. They can't catch up with 18 months of back payments. Now, granted, they will tack it on the end of the loan. They will extend the loan to even a 40-year loan. But a lot of people still cannot make the payments. Why? Well, because things have gotten more expensive. Now, you may notice when you go to the grocery store, it costs a little bit more money. That takes money out of the budget. When you go to the gas station, that costs a little bit more money. Takes money out of the budget. There's not a big enough budget to get caught up on those forbearance properties. They're behind on their payments. They're 18 months behind now, and they got to start paying. The bank says, hey, you got to start paying. The forbearance is over. Okay, so well, they're going to put them onto the marketplace. You're going to see a tsunami of properties coming onto the marketplace because things have gotten more and more expensive. People can't afford to live. Look at property taxes in many areas. They're not protected. Some places like California, it's where you bought your property at. They can only raise it 2% a year. But a lot of places, it just goes right up to market. And when home prices have doubled, you go to somewhere like a Boise, Idaho. They were selling for $200,000. Now they're selling for $800,000. Well, you know what that does to your property tax? Well, it's not good. Let's say it was $2,000 a year. Now it's about $8,000 a year. That is expensive. It takes more money out of the budget. There's not enough money in the budget. So people cannot afford things, and they're starting to think, what can I sell? What can I sell? Well, maybe they sell their boats. Maybe they sell their cars. But eventually they do sell their homes. Now, even rich people are selling their second homes. A lot of people have put their second homes onto the marketplace. So they're down to just one home because they had to sell their vacation home because they couldn't afford the property tax on it. Now, what happens when prices start to go down? Now, they're just starting. Look, I do think the carnage is done. I think that the damage happened when we went from 3% to 5.5%. But in the seller's mind, the seller's mentality, prices haven't come down yet. So they think they can still get out at the price Billy Bob got out down the street. Well, they can't get out at that price anymore. So now it's kind of stair-step down. And now when you got prices that are stair-stepping down, who leaves this market? Who's the one that really leaves the market? Well, it's the investors. Do you realize that investors make up almost 1 out of every 3 homes? It's actually about 1 in 4 right now. About 25% of homes that are bought are sold to investors. Well, when the prices are starting to go down, do the investors really want to be in the housing market? No, they don't. They're running for the hills. Look at when the interest rate went from 3% to 5.5%. Investors, they're not dumb. They're going, look, I could make money at 3%, at 5.5%. No, I don't want this. So a lot of the investor demand, which is 1 out of every 4 homes bought, has gone away. So I would say that the demand side of the equation, well, the demand side of the equation's already been cut in half. All right, I'd say that's about accurate in many areas. Now, of course, not your area, but in many areas that is accurate. But now, the other side of the equation is the supply side. And that's where that tsunami of foreclosures, the homes being built that are coming on that nobody can afford to buy. These are going to be dropping the prices, and you're going to see more and more people get out of the market. You watch these TV shows, the home flippers, they're going to be leaving the market. It's easy to flip houses and make money when the prices are going up. You try buying a house and fixing it up and flipping it when prices are going down. It's a great way to lose your butt. You should try it sometime. Anyways, I'm Tall Mike. If you like this stuff, give me a thumbs up. If you really like it, punch that subscribe button. Get out there. Have a great weekend. Next week's going to be so exciting. Will we have a 7th down week in the stock market? That'd be wild. I'm saying no. I'm saying we found the bottom this week, which is good news. I'm saying I think we're going to bounce from here. We'll see if I'm right. Everybody have a great weekend. Bye-bye now.